Short-term trading in cryptocurrency. What are the opportunities and what are the risks? That's what we're going to talk about today on Crypto Intel. My name is Max. I'm your host, and stay tuned to the end because I'm going to outline a strategy that you can use at the right time to virtually eliminate your risk. So let's get started. Now, first, it's important to understand that when we talk about short-term trading, what we're talking about in our overall trading plan is a small percentage of what we have to trade and invest with. So, usually 15 to 20, 25% is what I would normally use to trade on a short-term basis. And by short-term, I'm talking about anywhere from a few days to a few weeks. All right. So what are some of the opportunities? Well, one opportunity is that cryptocurrencies are volatile assets. So, when we talk about volatile assets, what we're talking about is that the price of these assets can fluctuate very rapidly. Now, that's a good and a bad because it can create opportunities for traders to profit from, short-term price movements. But it can also, if you don't manage your risk, it can also go against you very quickly. So how can we take advantage of the volatility of crypto assets? Well, first of all, we could look and see, well, how much more volatile are they on a short-term basis? So let's take a look at something like SPX. You can see here a couple of different ranges. If I mark out from the bottom of the range to when it broke out of the range, you see that's about a 9% move, okay? And that's at a time when SPX is really being much more volatile than it usually is. Now, let's go back to Bitcoin. Same kind of time frame, just around the same kind of time. You can see that there's a range here too, top and bottom. But from the bottom to the top, the range is 22, more than double. This is the advantage of cryptocurrencies in terms of short-term trading. The ranges are bigger and the ranges are much more quicker. Look at this. This is 1 day, 2 days. It went from almost at the bottom all the way to the top. That's probably an 18 or 19% move. Do you see that kind of a move in a couple days on something like SPX? No, you don't. They move much more gradually. So the advantage for short-term traders in crypto is that you can take advantage of this volatile asset and you can take advantage of these quick moves. Now, the market for cryptocurrencies is relatively new and it's relatively illiquid. That means that there's less competition from other traders. It can make it easier for us as short-term traders to take advantage of profitable opportunities. So one way is to play the range. You can buy your asset here when it hits the bottom. You see that it went to the top, it came back down. You can buy your asset here at the bottom, and then you can sell at the top. You put your stop loss a little bit underneath or underneath the previous low, and you can play it that way. But another way is looking for narratives. So what do I mean by that? Narratives are something that everybody is talking about, or a lot of people are talking about, and there are crypto assets that are part of that narrative. So let me give an example. Let's take a look here at gaming, where I have some assets here. Now, the narrative around gaming is also a narrative around NFTs. And the idea is that a lot of the assets within games can be made into NFTs and therefore can be owned and traded and profited by the players of those games. So what you want to do in terms of researching a narrative is look at the players, and you want to look at the players in two ways. One way is, what are the infrastructure players that are going to contribute to this narrative? And by infrastructure, what I'm talking about is those assets. They're going to go across all of the, say, for instance, gaming plays and help them to set up their games. So, for instance, Engine might be one in the gaming area. Ronin might be another one, okay? So you want to put these assets together in a watch list. Then you want to also look at platforms for games like Immutable X. You want to look at games, and another platform is Illuvium. You want to look at games themselves, like here, Cetify Fund or Nakamoto Games. You want to put all these into a watch list and then watch how the prices go. You're going to see that it's a little early for this narrative to play out, but now is the time to start researching. You see that most of these assets look the same. There's just lower highs, lower highs, lower highs. They're going in a downtrend. Here's another one, top to bottom. Here's another one, ApeCoin, top to bottom. These are all very low right now. So, but once the trend starts to turn back into a full swing bull market, if this narrative is going to play out, that's when you want to start getting in. But right now, what you want to do is track all of these coins within a narrative and watch how the activity changes. Once one of them, like for instance, suppose Engine Coin starts to have a pop up, breaks through this resistance right here. Well, that's an infrastructure play within the gaming narrative. So what you want to do is look at other infrastructure plays and see if they're ready to break out. And that's when you might buy that coin for a short-term trade. So, looking at narratives can really help in the short-term trading success. Now, one other narrative or way of looking at assets for short-term plays using the volatility is in something like proxies. So proxies are regular assets that trade on the stock market, but that are closely tied to crypto. So for instance, you can look at one narrative or one section of proxies can be miners, Bitcoin miners. Like for instance, here's CleanSpark. Here's another one. DMG blockchain solution. Here's Hive. And again, you're going to see that here's another one, Bitfarms. You're going to see that all these have the same rough structure. That we're still in a bear market. We're still having higher lows, higher highs. Lower lows, lower highs, and lower lows. And you see Hive is the same. See how it's going down? DMG is the same. CleanSpark is the same. But what you're going to notice, though, is these proxies can jump much higher than even Bitcoin can when there's a uptrend. So, for instance, let's take a look at CleanSpark here from the beginning of the year. Let me just go down here to the low, which was around November, December timeframe, and then mark off how high it went to the high just a month or two ago, 345%. Now, let's compare that to Bitcoin. So Bitcoin in the low looks pretty big, but watch. We mark this off here, and we go up to the high, it's about 100%. So a proxy like CleanSpark went up basically 3 times as much as Bitcoin when there was a big uptrend. So this is one of the advantage of doing shorter term trades with proxies like Bitcoin miners. Now, one thing you can do with proxies like CleanSpark, because they're on the stock exchange, is that you can use some tools and some strategies that you can't easily do now with crypto assets. One of those is using options. So just to give you an example, and I'm not going to go into option strategies here, but if you were to play the range like I talked about before, let's say you see the CleanSpark right here goes up to about $5, and you see it coming down. You see it's starting to get into a range. It gets down here and it doesn't go below. You can buy CleanSpark right here, buy the asset. As it's going up towards the range, when it gets up near the range high, then you can shorten at the money call, and you can long an at the money put at the same time. And this basically takes away almost all of the risk in this trade. If it goes up, you have your long. If it goes down, you have your short. So these are a little more complicated strategies because you could just buy the asset here, let it go up, and when it gets near here, sell it. And you have a nice short-term gain. I think that gain would be, within a matter of a week or two. Within a matter of a week or two, that would be a gain of about 20-30%. Just to be safe. So there's a lot more options with proxy assets. Okay, so let's just recap what we've talked about so far. Let me go back to Bitcoin here. So we talked about the fact that some of the advantages or opportunities is that it's a volatile asset. Crypto are volatile assets. They go up and down quickly. They go up and down more often. They go up and down deeper and up more. Number two is because it's a newer asset, there's going to be more narratives that come up where we could take advantage. And number three are we can use proxies like Bitcoin miners that are on the regular stock exchanges so that we can use other tools to use short-term trading and take advantage. Now, what are some of the risks involved? So let's take a look at that now. Now, of course, one of the first risks is that just like the opportunity, it's volatility. Volatility because you can easily lose your money when you're doing short-term trades that have a lot of volatility that are risky. So what you have to do, and let me just make sure that's spelled right. What you have to do is you have to use a stop loss whenever you are making trades, and you have to understand what kind of market you're in. So, for example, when we're in, let me show you another trade that we did a while ago. This is RNDR. And you can see here, there was a clear, let me just move this out of the way here. There was a clear breakout right here, and a range right here, and then a breakup. But what happened was, if you took the trade here, it went up and it immediately went back down. A breakout, fake out. A fake out, breakout. Okay, so you have to make sure that you're using a stop loss. Your stop loss would have been somewhere right around here. So if you did take this breakout trade, it went up nicely, but if it came right back down, you were protected in a sense because you would only use a small amount. This happens a lot when we're in a downtrending market like we are now. Now, we are starting to go uptrend, so it's good to be able to take these breakout trades to try them once or twice. But what you have to do is have a stop loss. So that's the first thing, okay? The second thing, and again, let me go back to our list here. The second thing is we need to have discipline in the market. Reason being is that short-term traders, in order to be successful, have to follow a plan. You have to know, especially in markets that are fluctuating like Bitcoin is, you have to know when to get in, when to take your profits, and when to get out. You have to have that understanding beforehand. So you need to be disciplined, and short-term trading lends itself more to emotional trading than your long-term investments or your cycle trades. Your cycle trades, those trades that are going to go from the bottom of a bear market to the top of a bull market, that usually takes a year or two. Those trades give you a lot more time. So you don't have to be making decisions all the time. And when you have to make decisions, that's when your emotions can get in the way. So you must be disciplined when you are doing short-term trades. Another one, you need to be well informed. By that I mean You need to know where the markets are going. What is the macro picture? In other words, what's going on with the economy? What's going on with the broader stock market or the broader indices? What's going on with inflation and interest rates? All these factors can come into play on a short-term basis. So we need, before we start making a trade, we need to look at the macro, look at these different elements, and make sure that we're trading along with where they are pointing. If they're pointing that there's going to be a downtrend, or if they're pointing to some immediate kind of fluctuation because of an announcement of some sort or a job earnings of some sort, maybe we need not to trade that day. So this is what we mean by being well informed. Finally, there's risk in short-term trading of crypto around the area of fraud and scams. And we've only just to look at items like FTX or BlockFi or Celsius. These are all basically scams that took advantage of people who were trading and risking assets when they didn't know there was a lot of risks. So these are some of the disadvantages, some of the risks in terms of short-term trading. But basically, the risk can be mitigated when you have a good trading plan, when you are looking at what the broader markets and the broader economy is saying, and when you follow your plan and not allow your emotions to direct your decisions. That's all for today. Please, if you like the content, give us a like, sign up for the notifications, and I'll see you on the next one.